Good morning, everybody. This is Roadhouse, Last Call, the morning show, coming to you live from the Roadhouse. This morning we have Bender, we have Mr. Stockington, and we have myself, Hell's Bells. Bender, how are
Good
you?
morning.
On fine morning. It is a good morning, isn't it?
Is it? I don't know. What's so
We're
special?
waking up, not being down 2%. I think that is, you know, it's like,
Okay. Yeah.
Isn't that
Good.
reason enough? Aren't we supposed to celebrate the small things in life, the little things? In order to appreciate the bigger things, we have to appreciate some of the smaller things in life. Like not chopping a limb off. Um, I think that's, something that you should celebrate, not waking up to death and destruction. I think that's something, given the environment, that we should celebrate. So therefore, that is the good morning.
I'll take it.
Yeah, me too. Definitely me too. Did you have any fun observations about life last night, Bender?
Um, did I have any? Well, the bulldozer broke down again. So it's still not working right. But instead of we kind of took a pause on working and we took a shotgun, a couple of boxes of shells, and a thrower and some clay pigeons, and we went up to kind of the top side of the property to this tree clearing, and we sat there for probably an hour and a half just hanging out, shooting clays, and it was one of those moments where you do that, you're in that moment, and it's like, yeah, we have a ton to do, but this sort of thing is kind of the reason that we're doing this, is so that we can have, so that we have the ability to go out and do that sort of thing without, because where I primarily live inside an HOA, you can't do stuff like that, right? And so I was just in that moment very thankful and appreciative, and the hard work that we'd put in to get to that point. It was like, this is worth it. This is worth it. It's going to be a pain in the ass to get all this stuff done and get the property cleaned up and everything else, but it's worth it.
Yeah, no, I think ultimately, in the takeaway that I get from that is hard work is actually worth it. It's actually, at the end of the day, it's worth it. There's a reason why you're out there sweating. There's a reason why you're out there grinding. And being able to take that moment of appreciation, I think, is a really cool thing. Yeah, well, good on you, buddy. So let's get into some of this shenanigans. The S&P closed in bear market territory yesterday. That is it is somewhat newsworthy. We also had the yield curve doing its yield curve things that is not good for the bull. Which again is every headline you're reading is recession, 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 recession. That is the main screaming point. With that being said, I posted something here in Roadhouse this morning. Wall Street Journal put it out this morning. It's basically showing how the market reacts, the S&P 500 reacts after closing within a bear market. After 1 month following that date, going back to 1957, there have only been a small handful of times that after that close in bear market 1 month later, the market does not perform to the upside. Very, very small handful. And if you push out, 3 months, it becomes smaller. 6 months, 1 year. The only time that it really, really got messy since 1957 would be 2008. And I think that if anybody were actually being objective and looking at the circumstances surrounding 2008 and the circumstances surrounding 2022, those are two completely different ball games in every capacity. Two different games. So, from historical context, we can look at this and say, hey, history is more on the side of bull at this point than bear from a historical context perspective. Now, that chart is posted. It is something everybody in the Roadhouse can look at, or if you have a membership to the Wall Street Journal, you can also go ahead and check that out. The other piece that was fairly interesting in another chart that I posted was the S&P performance by sector, going back to pre-pandemic highs. The biggest sector that got its ass beat was energy, and energy is on fire now. The one that flew like all bloody hell to the upside was technology. Technology is being set on fire now. So we have to get a reversion back to the mean to where these guys are actually kind of working together a little bit, trading together a little bit, as opposed to being complete and total opposites. That is kind of where we are. The bear market is being driven by technology. I don't think there's any question when you look at some of these charts that especially the communication sector within that, it's just not a real pretty picture. When you start talking about Facebook, Netflix, some of these other companies, they're the ones that are really, really bringing the stick to the market and have been. So following flow and watching flow in those sectors could be very, very interesting moving forward. Oracle, which everybody, has kind of left Oracle for dead a couple of years ago. They're actually starting to pull their business together a little bit. They put up great numbers based on their infrastructure and cloud revenues. And I think that when you're looking overall at tech, we need to get an understanding of how the market is going to react to those numbers. Can we get a sustained rally in that sector, or is it going to be more of a sell? Watching flow and watching the price action over there is going to be very important. At this point, we have to look towards anything and everything that we can find that actually gives us an idea of where we can actually feel good again about tech. Right now, from tech to consumer staples, everything's getting whooped. So we have to find that moment in time to where the market is saying, okay, well, it's kind of cheap, it's kind of priced in okay. We actually do have a future. We will need technology in some capacity in the next 5 years. So we should probably stop selling it. Maybe that's a thing, maybe it's not. Outside of that, flow that was kind of interesting yesterday, and want to talk about that a little bit. We had some SPY 387 calls that came in pretty hot going out to next week. It's important to watch that action regarding those. If they come in on the bid, that's going to be problematic. If they double down, that's going to be a good thing. But we have to watch some of these big lines that have come through. Equally, some of these this whale that continues to roll down on SPY puts, SPY puts and IWM puts. Whoever this cat is continues to roll down in a very, very heavy way. When he rolls down, we move down. When he rolls up, we move up. That's just one of those things that we've noticed over the last several months. And this individual has been very aggressive in nailing their shots every time the shot has been taken. So on watch today is going to be semi-flow, also big tech flow, also after Oracle, to see how some of that pricing reacts. IWM should be on watch. The one constant has been IWM in the beatdown that it has received going back to December-ish. So seeing any flow switch to IWM to the upside will be welcome because it really hasn't had any. We'll also be watching for any lines coming through on TNA and TECL. That's a 3X bull. Want to see if they're doing anything there. If they're hitting calls, especially 6-digit calls or more, that's a good sign. If they're selling calls, that is not a good sign. Those lines there, along with SQQQ, will be on heavy watch for me today going into FOMC. Keyword being going into FOMC, we're in a position now to where risk off would mean covering. That would be risk off at this point. Let's see if they actually risk off and we get some type of a covering rally, or if they just keep the hammer down. Finally, there's two more pieces that I want to cover before we get into Mr. Stockington. Last week we talked about how some of these retail inventories are building up from pandemic-related items, things like sweatpants, couches, refrigerators, electronics, that kind of stuff. These inventories continue to build. There is a thought that sometime after July, July 4th being probably the trigger, those holiday sales. There's going to be a lot of stuff that is much cheaper than what it is now. That's something that, in the spirit of helping that cocksucker Jerome Powell destroy the economy, we should probably not buy anything until the 4th of July. We should probably wait and not buy one thing until that weekend and things actually go on sale. Because if you remember, he did say, after all, growth has to move down. That's what has to happen for inflation to come down. This was him last month. There could be some pain involved in restoring price stability, but we think we can maintain a strong labor market. So far, all of those things really are not happening. Powell continues to be the enemy of the people in every way, shape, and form. So let's go ahead and help him out. Let's help everybody out and not buy shit until after 4th of July. Mr. Stockington, what do you have for us, sir?
Wait. Good morning.
Do we not care about levels this morning?
Oh, Bender, I am so sorry. I am so sorry.
What the hell did I even get up for?
You know what? You know what? You know what? Go ahead. Call me a name. Call me a name. I deserve to be called a name. What name are you going to choose to call me?
I don't need to call you anything. I've made my point.
Well, somebody in the room just called me a son of a bitch, so there's that.
You're getting lots of names in there. And I think it's deserving. Okay.
I think you're right, actually.
All
right, I'll go through this real quick. I'm going to post this chart. You remember the level that I gave yesterday? And it was the lowest level that I gave. And I said, I gave you two potential trend line support areas. And there was one that I said, if it gets here, this is where I think it will bounce. This is where it should bounce, because there was two trend lines that it actually lines up with, along with previous support. That number was 37.35. We got pretty close to that. I want to say the low was like 37.33 or something like that. So it's pretty close. Here is
I'm looking at it.
Here is that chart, and the reason that I put that number out there, you can see it in the chart. That is a 233 minute, so it goes back to that lighter colored sort of parallel channel. You can see that trend line that started back in August 18th, and you can see that trend line support angling down, right? That parallel channel going from upper left to lower right. But you can see where that trend line resistance has come into play a couple times, and trend line support on the bottom side of that. So that 37.30 area, we're 37.75 now, so we're 40 points above that. But if we pull back here, that's kind of the area that I would still say is pretty important. On the 60-minute, the 10 is at the 10 MA is at 37.82, the 20 is 37.76, and the 50 is 38.33. I think 38.25 to 38.33. If we're going to get any sort of rally, I would look at that level. If you're continue to be bearish, that's not a bad area to take a shot short with a tight stop. If everything else that you look at kind of lines up, that wouldn't be a bad area. If we can get above 3,800 and go test that 38.25 to 38.30, that's going to be an area that is pretty key for bears to hold in the short term, and key to get above for any sort of bullish move. So above that 38.30, then you got 38.50, and that above 38.50 should see a stop run on shorts. If 37.30 gives, then you get 3,700 and 36.86 below that, and until this gap gets filled above at 38.80 to 38.96, I'm going to keep that on this daily morning show that we do. I will be talking about that until it fills, and who knows how long that's going to take, but let's keep it in mind. That's all I got.
Thank you, Bender. I appreciate that. Yeah, no, it's like, once again, it's like it becomes really, if you really, really pay attention to Bender's segment, as far as when he's kind of saying, okay, you look at this level, and this level, you're going to be helped out quite a bit if you're writing those levels down and you're really, really marking them on your chart as areas of interest. And again, we can't reiterate enough. These are all areas of interest that have the ability to move in either direction off of these levels. So thanks once again, Bender, for putting those out. All right, Ockington. Do you have anything good for us, dude? Do you have something that's like, hey, there was some really, really, some good stuff we need to talk about today, as far as, some good stuff?
Yes, I have the good stuffs
You
today.
got the good stuffs. All right, well, come on with it then.
All right, let's go. Before I get into my stuff, I'll kind of tie in a couple things that we were talking about. One, you threw out there the energy rip to the upside. So Blackbox, we put out a flow play alert yesterday that's probably going to be down about 30% this morning. But there was some flow we saw into the XLE yesterday for July 1st, some put flow on the, let's see, the $80 strike. So that'd be something to keep an eye on. If you didn't get in yesterday, you can get it on sale today. They put some good money into that. And then the other things that we'll be looking at will be the levels. So we can start with SPY. There was some good dark pool. I put that pretty useful pivot table in the room yesterday. So downloading that, dropping it into the table there. The good levels to watch on SPY from dark pool we saw would be 375 even. There was decent money there. And then the big dark pool of the night was $10 billion at 389.95. That's the SPY. UVXY is kind of magneting right to a dark pool at 1771. That's going to be something I'll be watching today. And then getting more into the watch list levels. So
I'm sorry, Starling. Did you say that there was a $10 billion dark pool?
yes.
Did you hear that right?
Yes. And that's going to be 389.95.
Was that a phantom print, or was that signature coming from previous day?
Those are looking like signatures that were last night. Yeah.
Okay. Thank you.
So that's a good line to have on your chart for sure. All right. So for me on watch today, starting with Microsoft, they hit 1.7 billion at 242.26 last night. We're operating slightly above that, so we'll be looking to see if we drift down and have some kind of reaction to that line. And then I was looking to take Microsoft long if we break 244.35. Amazon, this is always exciting for me now because I trade it, which is cool. They hit Amazon at 103.67. Not a huge amount of money, but I'll be looking for a reaction to that line. Baba, Deja Vu, we talked about 102.01 last week, and I said, we gapped up, but add it to your chart, we may be back there, and here we are. So we just lost that level pre-market, so may see if we get some kind of retest. But Baba last night, they hit it with $300 million at 99.57. So we're operating between those two dark pools. I'll kind of see if we get a reaction to one or the other. And then I'll be keeping an eye on Meta as well. That was one. We saw some interesting flow there. And based on flow alone yesterday, we were thinking maybe that could have been a nice, trade to look for a move to the upside. So I'll be watching Meta kind of based on pre-market range below 165.2 and then 167.5 be some good kind of lines to keep in mind there. And I also had yesterday's low 163.90 if we start heading down. So that's what I'll be watching for today.
Very nice. Okay, so That's kind of all we have for today. I think that it's going to be very, very difficult to get a read on flow because we're going to get a lot of positioning going into one of those binary events, which is the FOMC tomorrow. I do expect a certain degree of covering going into the FOMC, whether it be during today's session or first half tomorrow's session. I do expect to see that. What I don't expect to see is any type of a clear-cut direction being given until, if I'm being really honest and I'm playing it safe, until Thursday. Tomorrow we're going to get those, algos firing left, right, and sideways. And then they get to contemplate, how they fire overnight. And then Thursday into Friday usually is when we get the actual direction after some of these binary events. Just know this, is that the market is a very, very dangerous place to be playing right now. Your best bet is to have discipline in what you're doing, which means your sizing, your entries, and your exits, and not being greedy or overzealous. You will not gain one nickel by being sloppy. There is no Captain Save-A-Ho for either side at this point. It is quite unforgiving. So you need to keep that in the back of your mind. You need to know that if you've had a good day, that it's okay to walk away. You need to have a lot of understanding of these things. And I know that sometimes it's easier to say than to do, but if we say it enough, maybe we might actually do it. Again, it's easier to say than actually do. But you have to give it a shot and respect yourself enough to say, hey, I've had a good day, it's time to walk away. Or, hey, I'm getting my ass blistered over here, I need to call it a day. You need to be able to do that for yourself, both from a mental energy standpoint and from a physical standpoint. It's like markets like this can take a toll on your innards. Everybody needs their innards to work properly. So with that being said, here's to innards working properly for the rest of the week, the rest of the month, the rest of the year. And yeah, Bender, you have anything else for the people?
No, I'm gonna post this longer term chart here in just a second. I'm just cleaning it up. But same game plan as yesterday. Just respect those levels, even if they're not my levels or the ones I gave up. Put your own on the chart and respect them.
Respect them, damn it. Respect them. Respect. Somebody spell it. R-E-S-E.
Don't do it.
All right, I'll be back in a few. Market opens in 17 minutes. See you soon.